Good morning. It's Wednesday, July 31st, about 6 a.m. Central Time. Overnight, the precious metals are much stronger. You've got December gold up $11 at $24.63. September silver up 19 cents at $28.71. Copper is also up, platinum and palladium. The gold-silver ratio coming off of yesterday's highs at about 87 to 1. Now we're about 85 to 1. So we are seeing a bit of strength in that copper market spilling over into the silver market. Now, I said that realistically, you do need a big copper rally in order for silver to get that two-prong approach as far as staging a nice recovery. So yesterday, the precious metals, they did start the session stronger, similar to what we're seeing, but it led into the economic data where we saw consumer confidence and also the JOLTS job opening data. Both of them exceeded expectations. Then as the day progressed, it's very important for you in Central Time or wherever you're at, look at, if I'm quoting it on Central Time, from 10 a.m. until about 10:30. We've seen a round of liquidation, and that liquidation comes from Europe. It's into the European close. This is the London Metals Exchange where that liquidation is occurring. So just keep an eye on that and keep aware that around that period of time, we've seen several sessions where liquidation has occurred, some big player there, especially in some of these base metals and other metals. Now, there has been some speculation that the Bank of Japan will raise interest rates. They did in the overnight session. So as the precious metals, this is again back to yesterday, we saw precious metals see that 10:30 liquidation, then speculation that the Bank of Japan will raise rates. So that's where we get the rebound in the metals yesterday. And then following that, we get an uptick in geopolitical tensions with the death of a Hamas leader and also a Hezbollah leader in Beirut. So the Hamas one was overnight, and I think that's because of the fact that was in Tehran. You have a big uptick in the geopolitical tensions here, and then also that type of safe haven buying. So look at September crude oil up $2.20. Gold up $11.50. We do also have a snapback with Microsoft being hit pretty hard after the bell yesterday, coming back here with the NASDAQ up about 297 points and the S&P 500 up 50. So this really sets the stage here and puts us in a real interesting situation coming into this FOMC meeting. So forget everything else basically today. You're going to want to watch the reaction with the FOMC meeting. We have held the Fed funds target rate since July 2023 at about 5.25% to 5.5%. They're going to keep that interest rate unchanged here with a 3.1% chance that they do cut. We don't see any cut here at Blue Line Futures as far as our expectations. But if you go to the CME's Fed Watch tool and you go out to September, 89.6% chance that the Fed cuts 25 basis points, 10.1% chance that the Fed cuts 50 basis points. So there is wide expectations for that September meeting. Historically, since 1990, we've seen a reaction in the gold market within the first 30 days after that first interest rate cut of an average positive performance of about 6%. Now remember, futures and options trading, historically, you cannot, that past performance is not indicative of future results, but it is something that we are strongly taking into consideration with our positioning here coming into that first interest rate cut. Now that recovery that we've seen in the gold market, we have taken out the July 25th high. So we've retraced that $64 sell-off, and it was yesterday the breakthrough at about $24.50. So that was the previous day's highs, and we cut through it like a hot knife through butter yesterday, and now we're extending on some of those gains. So the critical level that I'm going to be watching, 24.7950. If we can close on the December contract above that, we will shift from a neutral back to a bullish trend. So remember, we have been positioning for more of a neutral to bullish stance, neutral to slightly bullish if you get the metals edge. I've been writing it, and then outlining some of these key levels. So your key level support, you really don't want to see that market close below 24.22. If we break below there, chances are we will retest the psychological level of 2400, and the critical level of support is going to be 2393. So we get back over that 2479.5, we get threatened 2500, and then the market could make a serious attempt at all-time highs. Now the silver market, it is snapping back not quite the bang that we're seeing in the gold market right now. It doesn't have that geopolitical safe haven type buying. It doesn't have that Chinese buying that we really need to see take place like in the copper market in order to get this thing going. So you have two critical levels that come in close, and if you look at it, it's 30.46. That's kind of your trend reversal point, takes the silver market back to a neutral trend. We've got $30 as our psychological level, and then we also have the 50-day moving average right around that 30.46. So expect a lot of resistance there. Now what's nice is we are seeing stochastics start to rise from that oversold territory, but you need DMI plus to take out DMI minus in order to really get things going. So the average true range, 87 cents. Keep an eye on some of these outside markets. You really only need about 5-6 markets on your radar right now. Crude oil futures to monitor the geopolitical risks, 2-year treasury yields in order to see what short-term interest rates are doing, the dollar index to look at that breakdown where we would get that rotation into some of these commodities that are mainly exported, and then you got to look at the copper market, and then I think the NASDAQ, because of the fact that that broad-based liquidation in the NASDAQ that happened last Wednesday was what sparked that blaze that took out all these other commodities, specifically copper and silver. So you got any questions, give me a call, 312-858-7303. Remember, futures option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading, watch the Fed.